welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Well, thankfully, you're going to hang out with us for the second half of the Don and Gino Real Estate and Finance Show every Saturday, 9 a.m. to 10 a.m. For over 6.5 years now. We've shared with you what you need to know, want to know, should know about real estate, finance, your community, and guiding you to personal and financial wellness. You know, it's been fun.
Yeah, it's been a great time. And we want to make sure to invite you to our website where you can check out all 7 years of the catalog of our show on our YouTube channel at donandgino.com, where you can also take a look at the National Real Estate Cafe, which is our daily video blog, as well as Interview with the Giants, where we've had the opportunity to interview a couple of really great business people across the nation to help you succeed and hopefully maybe inspire you to do something bigger.
Well, you inspire us, obviously, to do this every Saturday. This is our favorite part of the week. We love this. This is something we enjoy doing. We actually still waiting for those paychecks to come in for doing this show, but actually we do this because we love this. And we started the show 6.5 years ago during the Great
Recession. That's what they decided to call it.
Basically the mortgage meltdown, and we started the show to help guide you, give you options, let you know that there are options out there and how to handle them. And it was all bad news back then, but it's nice. It's pretty much all good news now.
It's pretty much all rosy. Now, I'm not saying it'll never be bad news again because things are cyclical. So you're going to see the ups and downs, but I don't think we'll quite ever have the downs like we had. That was a one-time every 50 years event, hopefully. And that was a very stressful situation for a lot of families, you know, with job loss, then came home loss, came cars lost, and bankruptcies, short
real
sales.
Hardships, true hardships.
Real hardships. And luckily we don't hear that a lot about that today.
No, so we have good news for you today. And we brought one of our newest experts to the Skyline team, Cindy Russon, and she's joined Skyline Home Loans. Tons of years experience, processing, background in it, and loving what you do, right?
Absolutely love it.
Why'd you get into lending, by the way?
I just got into it as an assistant job when I was 18 years old, and
this
out.
is what you know.
Yeah.
Since 18?
Started at the bottom and made my way up to my favorite part of the job.
Yeah, so it's interesting that you made that switch, right? That you went, you know, you kind of grew up as an assistant, you did the processing part, you've done a lot of different facets of the business. What made you want to be a loan officer?
You know, I've watched my loan officers work with clients for so many years. I've seen some amazing loan officers, and I've seen some loan officers that just aren't quite on the ball. I've processed for them. So for me, I wanted to take a step up, and I wanted to actually give the clients the type of service I know that they deserve. And I know their paperwork so well, it actually gave me a little step up in the industry to start helping people. I've got all my friends and family to start with, and I've got a lot of realtor friends out there, some great partners. And I thought, who else is better to help them out than me?
Well, sounds like almost your story.
Pretty much. I was getting ripped off, actually. So, you know, the people that were doing my loans were totally ripping me off, putting me in the wrong programs. I now know exactly why. They were making more money putting me in the programs that they were putting me in versus what they could have put me in. So
they should have put you in.
They should have put me in, yeah. So, you know, I got the cost of bad advice was just too great, and it forced me into the industry. So it's been a good time. I'm actually really glad they did that.
I'm glad too. You've been a great partner for us and helping us grow Skyline and helping us support great teammates like Cindy Russon. So we told you this next segment we're going to talk about refinancing, whether you should refinance and what are some of the opportunities refinancing. Not just because we do refinancing here at Skyline Homes, again located at the new Sunkiss building, our new location right there by Magic Mountain. But just to give you an idea what you should think about right now, especially considering equities have grown
I was just going to say, we couldn't have this conversation 3 years ago because we didn't have the E word. We didn't have equity. But now that we do, equity opens up opportunities to, and you know, I'm kind of the nerd of the bunch, but to open up capital or to open up assets to be able to use them so that we can pay off liabilities or borrow money at a very cheap rate so we can invest it and make some sort of a yield on that. So
that's your angle.
That's my angle. That's what I like to do with equity that we have found. But some people just want to be safe, right? Some people. What do you?
What are you refinancing? What are you seeing in your clients' needs for refinancing right now?
You know, you get a little bit of a both. You get the people that lost all their equity back in the day, and they're too afraid to touch it. They don't want to pay off their motorhome or their cars, or because they did it all before.
Right.
But at the same time, it was a different industry. It was a different market back then. You know, our equity's growing up. It's going slowly. It's not a big boom. It's not bad interest-only adjustables that are going to just murder them when they try to do anything with their property.
So it's real loans.
It's real loans.
People that actually have the ability to repay their loans.
Yeah.
It's actually written in law right now, just so you know. We're not allowed to do a loan unless we can prove that the client has the ability to repay the loan. It can't be based on equity only. It has to say, no, income's this, assets are this, credit's this. Yes, they can get the loan.
Yeah, and that's been very challenging for the self-employed borrower. We do have some new product coming. We've been talking about it. A little bit of flexibility coming to the market to help the self-employed borrower.
Thank goodness.
Yeah, but cash out is probably I was going to say 50% of our deals involve some sort of cash out. And yes, that sometimes means a higher interest rate, right? So there's plenty of people that come to us with a 3.5% interest rate, and they say, I'll gladly take the 4 because I want $50,000, $60,000, $70,000 cash out from my equity. That's not always a bad thing.
No, because you can obviously utilize that to either debt consolidate. Maybe you had some debt. Could be
like
school
Cindy
debt
mentioned, pay off a car, pay off a motorhome, increase cash flow.
Yeah,
right.
definitely.
Obviously, you can probably, with equity increasing, you can possibly remove that mortgage insurance that you hate paying every month. And there's strategies, and you don't need 20% equity, by the way, to remove mortgage insurance. A lot of you go, oh, I don't have 20% equity yet. Well, rates have stayed low enough to where you still may be able to remove the mortgage insurance and lower your payment at the same time, even without 20%
Particularly if you had an FHA loan, depending when you got it, you could even get out of one mortgage insurance type loan and get into a different mortgage insurance type loan and still make a benefit, right? Because FHA, some of the FHA loans come with it. At one point, it was the mortgage insurance was 1.35%, was very high. And if you have a good FICO score, now you can get maybe in a little more equity. You can maybe get a mortgage insurance policy at 0.50. So think about shopping for mortgage insurance, not just mortgage insurance is the devil.
Definitely.
And you see some of your clients basically utilize the money for home improvements because of this tight market. Think about it. They're so tight they can't find another home. So, heck, we'll stay where we're at and improve it, right?
Yep, that or they purchase their homes and they go out and they spend all this money on credit cards. And now they're
improving their
not
home.
so happy with the credit card debt. They've got their nice, beautiful home. Let's wrap that credit card money into your mortgage if it makes sense. Let's do the numbers at least. Let's at least give it a shot and see if it makes sense for you.
Yeah, mortgage money is almost always going to be cheaper than credit card money.
Yeah.
And it sneaks up on you. I mean, I'm sure you had good intentions to improve your home or pay off debt or help Johnny through school or whatever it is. But thankfully, you have an equity position now that maybe you can utilize that equity to change your cash flow position that could change your life. Because there's a lot of stress out there when debts go up and you have to figure out how to pay them. And it's nice when you can eliminate them. It's amazing how it helps marriages.
We just did a refi for a vet, and he bought his house early last year. Got some credit card debt, improving his house, and he was struggling a little bit. Didn't even know he could refinance. Gave him a call. He was so excited. We wiped him of all of his debt, lowered his mortgage payment still because he had enough equity and the rates were a little bit lower. Happy client.
100% cash out VA loan.
Yep.
No doubt. Yeah, we had a client recently. We changed their cash flow position by almost $1,300 a month because they're just going negative. They couldn't ever catch up. They seem to be going more negative because you can't pay what you have, so you pile it on. And finally, we were able to wrap it up. They had a lot of equity position. We restructured their credit and a few other things to help them prepare. Took us about 6 months to prepare, which we did. And 6 months later, we eliminated and changed their life. They're so happy now.
That much money. What could you do with that? You could put that in a savings account every month and start to, acquire interest, a stock, a money market, maybe get into investing with it if that works for you. That's a $1,300 and something savings.
Yeah, one of the things that we were discussing on the break, and so if you're a veteran, you heard just that one little story that we talked about, your success story, but if you're a vet, Skyline's the #2 VA lender in all of Los Angeles County, and compared to the juggernauts of the large banks, and we still outproduce them on VA loans. It's A, because we have a passion for them, and B, because we understand VA loans. A lot of people don't understand VA loans. I know you're a VA expert and you have a special passion for them, so.
Yeah.
Well, we're going to say that because that's actually part of the success piece. The last piece we've been saving for you is how to succeed in this market. And a lot of vets, unfortunately, you're being told that you have a less chance of getting your offer accepted because you're putting zero down. We can change that. We do it every day, and you're going to find out how when you come back to the Don and Gino Real Estate and Finance Show. Don't go away.